Hello everyone, welcome to Indian Economy by Aman Soni. In today's news hour, we'll be discussing the important articles related to economy. In page 1, there is a mention of India's GDP growth estimates changing to 8.9% from the earlier estimate of 9.2%. It is very obvious that because of the increase in the global oil prices, the domestic economy would be affected and it would also have impact on the GDP growth rate. The NSO says that certain industries which are directly have contact would be affected by the pandemic. Those are the hotel, transportation, communication services and broadcasting, and all other sectors would be expected to growing at a level which is beyond the pre-pandemic levels. In the editorial page, there is an article related to the economic cost of the Russia-Ukraine conflict. Every decision of a country would have various impact. It would be a social impact, economic impact, political impact. This article discusses about the economic impact of the war between Russia and Ukraine. In previous news we have discussed that the European nations are in discussions to impose sanctions on Russia, and they have already imposed sanctions, and they were also discussing to keep Russia out of the SWIFT network, which they did now. And the economic impact of this war is going to have repercussions on major global economies which trade with Russia and which have economic relationship with Russia. In order to isolate Russia, the European banks decided to block few of the Russian banks out of the SWIFT messaging system. In yesterday's news hour, we discussed what is SWIFT messaging system and how it works. And the European banks also imposed restrictions on the Russian banks so that the Russians won't be able to use their foreign exchange reserves, which are estimated to be around 630 billion US dollars. And this directly had an impact on the Russian market and economy, which depreciated the value of Russia against the US dollar. And in order to stop the outflow of the foreign exchange from the Russia, the Russian central bank had to put certain restrictions on the capital flows, and the central bank also increased the benchmark interest rate to almost 20%. And even the Russian banks which are having businesses in the other European nations are getting affected directly from this issue. For example, the Russia's largest bank, the Bank, and its European arm, it's facing run on its deposits. What is run on the deposits or bank run? When the customers of a bank feel that the bank is not going to be solvent in future, they want to take care of the deposits. They want to keep the deposits safe so that even if the bank fails, their deposits would be saved with themselves. So they would want to withdraw the deposits. When all the or major customers of the bank go to the bank to withdraw their deposits, that is called bank run. And if major number of the customers go to a bank to withdraw their deposits, the bank won't be able to give cash to the deposits because the amount would be struck in different loans and assets. So the bank would be facing a high risk, and there are chances that sometimes the bank can also become insolvent. It can go out of business. That is bank run. And there was also a long queue outside Russia's ATM because people want to store cash for safety motive, for precautionary motive during the times of wars and unrest, and this would also lead to a higher runaway inflation in the Russian economy in future. And what are the economic costs of this decision on the other global economies? The European banks and those businesses which have direct relations with Russia in terms of economics, they will directly get affected. Because of the war, there is also disruption in the shipments of Brent crude from Russia, because of which the barrel price increased to more than $100 US dollar, and this would have repercussion on all the economies because of the increased cost of oil. That would lead to increased cost of production because the input cost of oil is itself is higher. Finally, it would mean the end product's price is also higher. This would mean that there is a general inflation in the overall economy, which we are going to see in the future. And all the countries which have major ties with Russia, they would be directly impacted because of this. That's about this article. In the open editorial page, there is an article related to railway line in Kerala. Here we just need to know that Silver Line is the name of the proposed semi-high speed railway line in Kerala. We don't need to go into the details of which is related to a Kerala state. We just need to know Silver Line is the proposed semi-high speed railway line in Kerala. Here in this article, we don't need to go through the details and numbers of it, but we need to know what are the core sectors, 8 core sectors, and from prelims point of view, we need to know the core sectors in ascending order, descending order, what is the weightage given to each of the core sectors, etc. Again, every now and then there would be revision in the target numbers, so we don't need to go in much into the details of it. We just need to know the trend. We can skip this news. Here there is an article related to ECGC. For all the Indian exporters who are exporting, the ECGC, Export Credit Guarantee Corporation, would give insurance cover. But now, because of the conflict in Russia, the ECGC has revised the currency risk of the Russia. It has put Russia from the open cover category to restricted cover category. That means when a country is in open cover category, the exporters who are exporting to that country would get insurance at more liberalized rates. Now, because of the restricted cover category, they would still get the insurance, but there would be more checks on that classification. And India is not that directly affected from trade with Russia because the oil prices would be impacted, but the trade with Russia is just around $2.65 billion, and the exports to Ukraine was just around 450 million. So that India would not be directly affected from Russia in this matter. We just discussed that it would not directly face fact. This article says the same thing. India faces limited commodity price risk. Our primary price risk is from the oil price increase. Commodity price risk is when the price of a commodity changes because of various factors, say political factor, because of the weather related factor, it would lead to a drought and there is no supply of the product, then the price of the product would increase, or there is some other reason. So if the price of the product behaves erratically, then that risk is called the commodity price risk. And certain sectors which are dependent on gas, like the chemical sector, the gas sector, the airlines which use the gas as primary input, all these sectors would be directly impacted. That too because of the oil price risk, not because of the commodity price risk. Because our trade with Russia and Ukraine in the Indian trade basket is limited as compared to the other countries. We can skip all this news. They're not important for exam. And this is also not important from economy point of view. Those are the articles related to economy today. Thank you so much.